Good morning, traders, and welcome to the week ahead from Traders for Traders. Okay, fantastic week ahead here for us, certainly in Australia, because we've got a day off tomorrow. It's Australia Day holiday on Tuesday here in Sydney, but don't let that think it's going to slow down the market. It's just Australia's got that holiday. So quite a start to the week so far. This is the charts. It's actually 2 o'clock Sydney time, but really the rest of the market's just getting going. Fundamental data wise, we've not seen, and there isn't much out today. NAB business confidence came out earlier, slightly lower than the previous number, and that's pretty much it for the Asian session. But looking ahead for tonight, only one real decent piece of data coming out, and that's the German IFO business climate. That's at 8 p.m. Sydney time, so certainly be looking for euro to maybe move a bit on the back of that, and having a whip over to our euro chart, just sitting on this trend line. It's not the best trend line in the world, but it is starting to form nicely, and you can see here where we've got a bit of consolidation on it. It's just moved a little bit off there now. It's probably going to be a good trading level to go off, whether you're a bear or a bull at the moment. Now, let's be honest, the theme of the last few weeks hasn't changed this week, and I think we're going to continue to be equity watching, and this is the equity markets as they stand at the moment. Dow Jones, and most of you will have known that the markets finished off the week actually quite well, having had a bit of a roller coaster throughout last week. Dow Jones finished up 1.3 on Friday, S&P 2. These are obviously live prices now in the Asian session. So the Nikkei is actually lower than where futures had it priced in opening, but still healthy numbers. They're all in blue. And the Chinese ones, which are probably more dominant at the moment, up 1.17 in Shenzhen and up 0.9 in the Shanghai. So risk on trades looking fairly good. So, and this is reflected across the board. Here's dollar yen, and this is that recovery seen in the equities from late last week, reflected in the currencies. And just bring you in a bit closer on this dollar yen chart. A nice move up from those lows around 116 the figure, and we're currently trading around 118.75. So decent moves there in the currencies on the back of the equity moves. We're certainly going to be seeing a lot more of that this week, I think. Don't forget, it's the last week of the month, so we do tend to have it's very low on fundamental data releases, so you don't get that catalyst, so you will be able to go with the trend. Fortunately for us, the trend really is to follow equities this week, so it will still be whippy. Keep an eye on it, keep trading your levels, and you'll see as I go through the charts that the levels are really working quite well. Okay, let's get stuck into what we've got left for the rest of the week. So, as I said, tonight in Europe, we've got that IFO. That's going to be the dominant piece of information. But later on, really late in Europe, 5 a.m. Sydney time, ECB President Draghi speaking again. So back to our euro charts. Obviously, we had the ECB last week. That gave us this rock and roll movement. So above 109 all the way down to hit this trend line, which was quite nice, and then bounced all the way back to 109 again. It was very volatile. Adjust your trading accordingly. Then we move on to Tuesday. As I said, it's a bank holiday here for Australia Day, so quiet over here in the Antipodes, but certainly the rest of Asia is going to be up and running. Not too much in the way of fundamental data, so once again we'll be back to watching those stocks and the Nikkei Open and the Chinese moves. Moving on Tuesday evening, fairly quiet on actual data, but the Bank of England Governor Carney speaking. Now, let's go back to last week, and if you followed last week's preview, I was looking to see if we were going to get the catalyst to start seeing a bit of strength come into sterling. Now, we actually did get that move, and the data backed it up. So we got 3 decent pieces of data out of the UK, actually, with the exception, 2 decent pieces. One with the retail sales wasn't so good. But what threw a spanner in the works was Governor Carney coming out and talking. He wants that 2% in inflation before there's any thought of a hike, and that drove cable lower over the week. Funny enough, finished up pretty much where we started, around this sort of 143 level. It was a bit rock and roll. Good indication on the strength of sterling really comes on this chart, euro sterling and probably sterling yen. So I think let's have a little look back. Here we go. I was talking here. I was getting a bit contrarian, looking for the sterling to appreciate. It did, but it was a hell of a rocky road all the way through. And that's because of what we got out of the ECB, what we got out of the stock markets, and then eventually what we got from Bank of England governor. So it has appreciated. It could well be the start of sterling appreciating, certainly against the euro, and it looks like it against the dollar as well, but this is pretty much a risk on trade. So keep an eye on what's coming out from these guys. The central bankers are really going to be dominant this week. Moving on to Wednesday, once again, really quiet in the Asian session. We've not got much in the way of Wednesday morning, US data coming out, CB consumer confidence. That's not a massive number. Some people have got it down as tier 1. Me, it's really tier 2. It's expected to come out as 96.6. So if we're pushing up for 100, then you can see the dollar appreciate. Always when you're trying to put these trades on the moment, be aware of what's going on in the stock. So for instance, if the dollar appreciation number comes out and stocks are on the front foot, probably something like dollar yen's a good trade to get into. If it's the other way around and stocks are on the back foot and getting knocked, you probably want to buy dollars against something like the euro. That's where you're going to get your extra trade from. We'll cover that when we're doing the live trade webinars. So holiday here on Tuesday. We hit Wednesday with big numbers in Australia. CPI quarter on quarter expected to come out 0.3%. This could take Aussie out of its sort of lower comfort zone. We've got used to these low numbers, and China's been dominating that. Chinese stocks have been driving it lower, as has Chinese data. Now the Aussie data, if CPI and inflation comes out stronger, could see us knocked back up to the top side of this range, and that might change sentiment. But we're never going to be too sure until we see that data coming out. That's pretty much it for us here in Asia on Wednesday. As I said, very, very quiet. Tier 2 data through the European session, but there's some good stuff coming Thursday morning for us here in Asia, but Wednesday day for the New York and UK sessions. We've got the FOMC. That's the biggest central bank in the financial markets. Check that out. That's 6 a.m. for us here. And timed accordingly in the UK. So sort of afternoon for the UK, mornings for the US guys. That is massive. We should see some whippy price action with the FOMC. Obviously, we got that hike in December. Let's see what they're going to be saying about that in January. Followed up by probably one of the smaller developed central banks, the RBNZ. That's Thursday morning, only an hour after the FOMC. Funnily enough, that could give us a bit better trading conditions. Looking for the RBNZ to probably stick at 2.5%, but their statement could be interesting. I fancy the downside on that. If we're trading at a decent technical level, we might get some really decent moves coming off the back. It's followed an hour and 3/4 later by the trade balance, but certainly whatever the RBNZ says, if they come out with something punchy, that is going to dominate the moves there. That's Thursday for us here in Asia. We've got import prices in Australia and retail sales in Japan, but they really won't be the big market movers. They're pretty much secondary stuff. Looking ahead into the Thursday session in Europe, we've got German import prices, prelim CPI, Spanish unemployment, all of those second stroke third tier data. You won't get too much movement off of euro on those. Be aware if you've got euros positions, they're coming out. Big number in the UK. We will be covering it live in a webinar for Gibbo and Pez are over there in our London trading floor. The prelim GDP numbers. Now, once again, as I said last week, we got a lot of sterling data, predominantly on the top side, apart from those retail sales I mentioned before. We'll be looking for the GDP to back that up. 0.5% is expected, so anywhere 0.7 or above will really get this sterling move rocking and rolling and the euro sterling to the downside. If we get a disappointment, I can see sterling getting back into this longer term trend, which is down, clearly. Have a look at this chart. And we'll see it break down through this trend line and sort of start to challenge these lows again. Obviously, that's 4 or 5 trading sessions away, so we may already be down there or way above it by that stage. Further, later in Thursday night or Thursday day for you guys up there in the UK and US, core durable goods come out and the weekly unemployment claim, so keep an eye on that. Durable goods month on month expected to come out at basically 0. So nice, easy trading opportunities. Once again, and we'll be covering it live in the live trading sessions, keep an eye on what stocks are doing. They're still going to dominate the move. Even when you've got central bankers talking and even when you've got these big pieces of data, they'll take over the move, give you a short-term bias for maybe an hour, 2 hours. But the stock markets, those risk-on, risk-off trades that we've been seeing for the last 3 weeks, they're going to dominate. Into the Friday session here in the Asian time zone, we've really got nothing again. Our PPI out of Australia is not a bad piece of data. I'd still say it's second tier. That's expected to come out 0.6. We've got CPI, household spending in Japan. Once again, most of this Japanese data will be completely dominated by what's going on in the Nikkei and what's going on in the Chinese stock markets in the Asian session. But if you've got positions in the yen, in the Aussie, in the Kiwi, don't forget about these bits and pieces coming out. You will hear from the BOJ Friday afternoon as well. That can make the dollar yen move. 4 times out of 5, we don't see much out of it, but that 1 out of 5 when the BOJ is something that hits the market, you will get 1, maybe 200 points out of it. So be aware that they're going to be talking as usual, no time given for them. You'll just see a load of headlines come out on your news service. Friday into the European session, we've got German retail sales, we've got Spanish CPI, all of these things pretty much second tier data, probably only move euro 20 or 30 points if they are massively different. What we have got is the CPI flash estimate. That is a much bigger number. That's expected to come out 0.4. That's for the whole Eurozone. If we do get a decent move one way or the other, and to be honest, given current normal markets that we're seeing at the moment, it'll be downside from the euro, then you will see euro get hit. Traders are still looking to hit euro on any bad data. Once again, can't reiterate this enough. Keep in mind what's happening in the stock markets when you're entering these trades on fundamental data. If they're going with the trend, you want to stick with it for a bit longer. If it's a counter trend, it's probably a much shorter trade. It doesn't mean you don't put it on. Just look to take your profits a little bit quicker. Finishing off the week for us, we've got GDP both in Canada and advanced GDP in the US. Now, once again, for those trading dollar CAD, this data is out exactly the same time, so you don't always get that great move in dollar CAD. But that GDP number in the US is important, expected to come out 0.8. We'll all be looking at it. The FOMC will be looking at it. You'll probably hear the FOMC mention it in their chat 2 days prior. That can give us a little bit of a whippy move on a Friday afternoon. A few bits of second tier US data after that, Chicago PMI, employment cost index, and the revised University of Michigan consumer sentiment. They probably won't have too much of an effect on the market. Really, it's going to be on that last thing of the week, that advanced GDP out of the US. Could be that last catalyst we see to move it. So guys, that's pretty much it. That's the week ahead. There's a fair bit of stuff coming out, but it should be maintaining its trend. Unfortunately, the real trend at the moment is to trade with the stock market. So keep an eye on your levels. It's easily tradable at the moment. Risk on, buy your Aussie yen, dollar yen, sterling, and Kiwi is still moving with these stocks in the Asian session. Risk off. You're seeing euro rally. Obviously, you're seeing dollar yen get hit and the yen crosses get hit as well. Keep an eye on those. That is still going to be the trend to jump with this week. Make sure you're trading at decent technical levels when you get into it. Any questions, guys, please give us a shout. All members, we're live in the trade zone at all times, as you know. Non-members watching this, please whip us an email, info@tradersfortraders.com. We'll get back to you as soon as possible. Thanks very much, guys. Have a fantastic week ahead and good luck. Cheers.